What's up, everybody? Welcome back to my channel where you subscribe for a video on investing every single day. It's me, and today we are looking at some of today's market moves. First up, GameStop. GameStop stock is soaring after announcing plans to sell $500 million worth of stock. The company said it will use the proceeds from the offering for general business purposes, which may include acquisitions, investments, or working capital. GameStop went public in January 2024, making it one of the most shorted stocks on the market, with 13.3% of its shares sold short. For those of you that don't know what that means, when a stock is heavily sold short, it means that Wall Street believes that stock price is going to go down. But if they're wrong, that stock price can shoot up like we've seen over the last few days. GameStop was one of the most shorted stocks on the market. That could be why we saw such a big reaction to this news. In fact, in pre-market trading, GameStop jumped by as much as 26% on the news. Next up, Tesla. Goldman Sachs analyst Mark Delaney raised his price target for Tesla stock to $300 from $275, citing Tesla's strong execution in the first quarter and reiterating his buy rating. The analyst expects Tesla to deliver 1.8 million vehicles in 2024, driven by the ramp of new plants in Berlin and Austin. Now, if you remember, just last week, Elon Musk, CEO of Tesla, said he expects Tesla to hit 2 million vehicle deliveries this year. So that might be why Goldman Sachs analyst Mark Delaney is so bullish on Tesla right now. In fact, in pre-market trading, Tesla stock popped by as much as 4% on the news. Next up, Disney. Disney is reportedly planning to slash hundreds of millions of dollars in costs from its streaming division as it battles weaker than expected growth in subscribers. The media giant is aiming to cut hundreds of millions of dollars in costs across its streaming division, including marketing expenses, which could mean that we'll see less marketing for Disney Plus and Hulu going forward. Disney aims to reduce costs without sacrificing subscriber growth or its content slate. With so many streaming services right now, it's hard for any one streaming service to really stand out. So cutting costs is likely going to be the only way that Disney can grow its subscriber base moving forward. And that's not a good sign for a company that is already a dominant player in the streaming space. In fact, in pre-market trading, Disney stock was flat on the news. Next up, Apple. Morgan Stanley analyst Katie Huberty raised her price target for Apple stock to $3,100 from $2,900, citing Apple's leading position in generative AI and the potential for the iPhone maker to reach an $8 trillion market cap in the next 2 years. Now, that would be huge for Apple because it would make the company worth more than the entire GDP of Switzerland. Now, the thing is, even though she raised her price target, Katie Huberty actually downgraded Apple to equal weight. So even though she believes that Apple could hit $100 per share, she doesn't believe that there's upside for the stock price right now. So if you're an Apple shareholder, you should probably sell your shares right now, according to Katie Huberty. In fact, in pre-market trading, Apple stock was down by as much as 1% on the news. And lastly, let's talk about cash. A recent survey found that nearly half of Americans have no emergency savings at all. In fact, the average American only has enough emergency savings to cover 1 month without a paycheck. The survey also found that only 21% of Americans feel confident about their finances. That means that a whopping 79% of Americans are struggling financially. These are shocking numbers, but the solution is actually very simple. First, stop spending money on things that you don't need. Second, start building an emergency fund that can last you anywhere between 3 to 6 months. And third, invest your money in assets that can generate passive income. If you follow these steps, you'll be able to build your wealth and get closer to financial freedom. Now let me ask you this. What is your biggest money move today?